Okay, so welcome to the deep dive. Today, we're going to jump into something pretty big that's just happened in digital finance. It's called the Genius Act.
Yeah, just passed the Senate. And it's the first major piece of federal regulation for stablecoins in the U.S. A really big step.
Right. And maybe just a quick reminder for everyone, stablecoins, these are the digital currencies designed to keep a steady value, usually pegged to something like the US dollar.
Exactly, which makes them super useful, for online transactions, trading, all sorts of things where you don't want that wild crypto volatility.
Yeah.
They're kind of like the bedrock for a lot of digital activity.
Got it. So what we want to do today is really unpack this Genius Act, figure out what its key parts are, and what it might mean for stablecoins going forward here.
Yeah, and it wasn't just squeak through either. Passed the Senate 66-32. Pretty strong bipartisan vote back on May 19th.
Okay, so that's significant in itself. Let's get into the details then. What does this act actually demand from the companies, the ones issuing these stablecoins?
Okay, so basically the heart of the Genius Act, it's really about safety and trust. Big focus on reserves. Issuers, they absolutely have to hold reserves in really safe, liquid assets. Think U.S. Treasury bills mostly, maybe some very high-quality, short-term commercial paper too.
Right. So you know the money's actually there. It's not just smoke and mirrors.
Precisely. And they can't just say they have it. They need to publicly disclose what those reserves are and get regular audits, independent audits.
Transparency. Okay.
There's also the standard stuff, compliance with AML/CTF rules, anti-money laundering, counter-terrorist financing, trying to keep bad actors out.
Makes sense.
And importantly, there's a bit about bankruptcy. If an issuer goes under, stablecoin holders get priority. They're higher up the list to get their money back.
Oh, that's interesting, like protecting the actual users.
Yeah, trying to prevent another Terra Luna situation, So the overall goals are pretty clear. Reduce the risk of these things collapsing, build up user confidence.
And maybe make them usable for, like, real-world payments eventually.
That's the hope.
Yeah.
Position them for much wider use. And supporters, like Christian Catalini over at MIT, they argue this clarity, this predictable environment, actually helps innovation.
How so?
Well, the idea is that if the rules are clear, both the big traditional finance players and the newer fintech startups might feel more comfortable getting into the stablecoin game.
So more players, more competition, maybe better products for you, the user.
Exactly. It turns that regulatory gray area from a risk into potentially an opportunity. That's the pro-regulation argument anyway.
But there must be criticisms too, right? It can't be all positive.
Oh, for sure. Some critics are saying, okay, this is good, but does it go far enough? Particularly around potential ethical issues, influence conflicts of interest down the line.
Like what specifically?
Well, the act does ban current members of Congress, top executive branch people, from issuing stablecoins while they're in office. But the concern is more about what happens after they leave office or, indirect influence, maybe through advisory roles or investments. It's tricky.
Yeah, those revolving door kind of concerns.
Right. So there are already calls saying, look, we might need amendments later to tighten up transparency and accountability there.
It kind of makes you think about that World Liberty financial situation, doesn't it, with their USD1 coin?
Yeah. The connections they had and that big transaction involving the Abu Dhabi investment firm and Binance.
Which, to be clear, wasn't illegal at the time.
No, absolutely not. But it definitely raised eyebrows and sparked conversations about, well, where do you draw the line between private business and public responsibility?
Yeah.
Especially as these rules are just forming.
Exactly. It highlights the kind of things regulators need to think about going forward. So, okay, the Senate passed it. What's the next step for the Genius Act?
Now it heads over to the U.S. House of Representatives. They have to debate it, maybe change it, vote on it.
And if it passes there...
If it passes the House and gets signed into law, then boom. It becomes the foundational piece of stablecoin regulation in the states. It takes them out of that regulatory limbo.
So a really pivotal moment, but it sounds like this isn't necessarily the final word.
Oh, definitely not. So even if it becomes law, you can probably expect ongoing political discussion, industry adjustments, Potential tweaks and revisions down the road are almost guaranteed.
Okay, so let's try and wrap this up. Key takeaways. The Genius Act is setting up a real framework. It's about reserves, being open about those reserves, protecting users, trying to foster innovation while managing the risks.
Yep, that sums it up pretty well. Moving stablecoins into the regulated financial sphere.
So here's something maybe for you to chew on. We know digital finance, crypto, it's all global, right? Things happen everywhere. How do you think this U.S. approach, the Genius Act, might end up influencing what other countries do with stablecoin regulation? Or maybe how will international efforts influence how the U.S. implements or changes this law in the future?
That's the big question, isn't it? How does this fit into the global puzzle? Definitely something to keep a close eye on in the coming years.